Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Hello, everybody. Welcome back to the Blockchain Show. Thank you for tuning in. I'm here with Prabhakar from FalconX. Welcome to the podcast.
Thank you, Ethan. It's a pleasure to be here.
The pleasure is all mine. I know I just rehearsed your name, but I feel like I said it wrong. So if you wouldn't mind, please say a little hello to the audience. Tell us a little bit about yourself and, how you came to this blockchain space.
Sure thing. And you actually did butcher my name, so thank you. I'm Prabhakar. Hello, everyone. I'm the co-founder and CEO of FalconX. Started the company 3 years ago, but prior to that, I've been a serial entrepreneur my whole life. I built 3 businesses, had 2 successful exits, and my first venture, I started that while I was still in undergrad with 2 classmates of mine. Funny story, started as a bet against another classmate, but that turned into almost a $250,000 exit before we graduated. And we used that money and the confidence from that to launch another venture after that, to launch an online video streaming platform, which was one of the first high-definition online video streaming platforms in 2008. Literally right place, right time, to be honest. Internet speeds were taking off. Video consumption was taking off everywhere. So we grew into the top 100 most visited websites in the world between 2008 to 2012. Exited that a few years later. Went to Harvard Business School in 2012. And after HBS, I started a company called Dramatize. This was, think of it as a Hulu for India or for Bollywood content in 2014. Again, in a right place at the right time, I would say just got lucky. We scaled Dramatize to one of the largest online video streaming platforms in India by 2015. And in 2016, we got acquired by one of the largest tech media companies there in India. Post that acquisition, I took a slightly different turn in my career. I became a VC, joined one of the leading venture capital firms called Accel. And while I was at Accel, this is how I got into the whole blockchain and crypto space. I was looking at what's the next 100x sector within fintech. And I read the Bitcoin white paper, fell in love with the concept of tokenization. And, as the proverbial saying goes in crypto, I fell down the rabbit hole in late 2016. And I spent most of my time in 2017, 2018, diving deeper into crypto, building a thesis, digital asset thesis for Accel, and also actively trading a lot. And while I was personally trading, quite a bit, realized that there's a lot of missing infrastructure in the space for not just individual traders like me, but for more serious institutional capital to come in. And with that context, I realized in 2018 I'd rather be an entrepreneur than a VC. The Accel's blessings as well as their money, I left Accel and put together a very strong team from Google, Jump Trading, Citadel, and so on. And me and my co-founder started the company 3 years ago now.
Wow, that's an impressive background. I'm always kind of curious what's going on in that part of the world. This specifically about cryptocurrencies. It's huge, and it's only got to be growing every day because I know it is here. I've got friends from high school now that are sending me links to Gemini to sign up and all this stuff, and it's kind of like, wow, it's really hitting. So I guess my question for you is, you mentioned, reading the Bitcoin white paper and falling down the rabbit hole. When did you realize that this could be a business? Because you've got a background in tech and being an entrepreneur.
Yeah, I'll take you a little bit back in terms of our realizations and learnings, and how we came across the idea itself. So, as me and my co-founder were trading a lot, we realized that in order to effectively get best execution, especially as a high-frequency trader or someone who's trading large blocks, you need to open an account with at least back then, 15, 20 different exchanges. Today, there are 200 plus exchanges, right? And then you need to open an account with another 10 plus OTC desks. And then there is dark pools, there's miners, there's other liquidity venues. And, onboarding time with every exchange is anywhere from 2 to 6 weeks. Right now, you're submitting a lot of paperwork, do all that hassle. You get through it. It's just operation work. But then in addition to that, you need to connect your infrastructure to their APIs, which can take, again, per exchange or per liquidity venue under 3 to 6 weeks. And maintaining all this infrastructure connectivity requires like an army of engineers working full-time on it. And in addition to that, there's inventory management, right? Like at least in 2017, 2018, if you recall, every 2 weeks there was one exchange hack happening. So you were afraid of leaving your assets on any non-tier one exchange. So every day morning, you'd wake up, you'd spread your liquidity across 10 or 20 different venues. And every night, you just pull that all back into one centralized venue and rinse, repeat that every day, right? And then in addition to that, like the best price used to change like from every exchange. Like there were such large differences between, Canadian exchange versus a US versus an Indian versus Korean exchange, and finding the best price is like a constant game of whack-a-mole. And in addition to all of this, what's unique about crypto is that you have a ton of fake data and wash volumes, right? So when we actually just spoke to a lot of traditional finance folks, like how do you guys resolve this? Like you guys run funds, like what are you doing about it? And when we went fund after fund, we all realized that nobody has a solution. They're all like, trying to wing it and trying to figure out solutions just like we were. Realize that, okay, there is a solution in traditional finance. They're called prime brokerages that actually solve all of this for institutions, but there is no such concept here. Everyone's trying to reinvent the wheel themselves. And this is where the idea emerged from.
Yeah, that's fascinating. Something that I think was called the defining moment that the crypto industry is in. And we're starting to see a lot of bigger institutions investing and trading in cryptos. And that's got to be a huge reason why, I would assume, I'm no expert in the markets, but why we're seeing such a huge increase in crypto trading. It's just kind of wondering how it is that FalconX specializes in the institutional investing and trading, that kind of niche that you offer. Because, you mentioned earlier all the different crypto exchanges, and it's overwhelming. It really is. And for someone who's just trying to get into it, I can't even imagine. But especially someone who's in a big business, and they've got, huge amounts of money that they're trying to move around and invest, and like you said, trying to find the best rates. So maybe just kind of walk me through the process of how FalconX is helping some of these people.
Absolutely. But maybe for the listeners, I'll just give a little bit of context on what FalconX does and who we are, right? And then we can talk about how we do what we do. FalconX, in the simplest form, we are a digital asset trading platform or prime brokerage built up for institutional investors. We offer trading, credit, and clearing in like a simple, seamless one-stop shop format. Today, we're almost 3 years old as a company, but we're fortunate to be servicing some of the largest hedge funds, prop trading firms, payment gateways, Fortune 1000 enterprises around the world. In addition to that, we're also proud to have several notable investors such as Accel, American Express, Coinbase, Fidelity, Flybridge, and most recently Accel and Tiger Global as investors and partners in this journey along with us. Now, over the last, say 12 months or so, we've seen a massive influx of large traditional finance institutions coming to the space for various different reasons, and we'll get into that. But your previous question of how we do what we do, it's a combination of data science and technology. We're a very small team, Ethan. We're a team of approximately 45 people servicing over $6 billion of transaction volumes every month. We're larger than some of the biggest exchanges that which have 500, 600 employees. And we're doing that level of scale and volumes effectively because of the infrastructure and the technology that we built.
Yeah, that's fantastic. So we're talking primarily focused on business and not the individual?
Absolutely. So we are institutional only. We don't cater to retail folks. Majority of our institutions are, ECPs or eligible contract participants who have more than $10 million of assets under management. Not saying they're the only ones, but majority happen to be in that bucket for us. And if I were to just break out personas would fall under, as I previously mentioned, hedge funds, and this could be crypto native hedge funds or traditional finance hedge funds, prop trading firms, OTC desks, payment gateways who are using crypto as a remittance rail. We have Fortune 1000 companies who are trying to put anywhere from 1% to 5% of their AUM into Bitcoin or ETH, and that's just massively grown as a segment in the last 6 to 9 months with impending inflation coming through. And we also have miners, which is again a crypto native persona that we have as a client.
Yeah, very good. And something on that topic that kind of piqued my interest was how you can facilitate a 500 million BTC over 2 to 3 days without affecting the market much, because that's hard for me to understand, because you would think such a large buy would change things. But how does that work?
Yeah, very good question, Ethan. So, if you go back in time, even up to like 2 or 3 years ago, it was extremely difficult to conduct such large transactions without moving the market much, right? However, just super happy, like the market infrastructure in the last few years has improved so much that we are actually able to move these transactions without significantly moving the market. Like even today, if you try to do a $500 million transaction, like one shot, you will move the market. But if you're trying to facilitate that over a period of 2 to 3 days, FalconX has done that without moving the market much, while also preserving the privacy and compliance that's needed for like these institutions. So how do we do it? Well, there's several different ways to execute it algorithmically. So we could break it into $20 million chunks and basically execute it over a period of time. We could run a algorithm like a TWAP or a VWAP and make sure that clients get their restrictions and their requirements met. If they're trying to basically execute within a period of say 72 hours, then we basically will run a time-weighted average. If the rates basically want to run it based on the amount of volume that there is so that they don't move the markets much, we can run a VWAP. There are different styles of running the orders executions.
Wow, that's fantastic. I see this becoming a kind of like a new global standard in the years to come. I know there's a lot of, I don't know what to call it, fear in the U.S., probably with, the central banks here, because they see this as a threat to their dollar, which is, I think, still used, over 77% of international settlements are in the U.S. dollar. And we've seen, I read something about China coming out with a digital currency. I don't know much about it. I don't think it's necessarily crypto because it's pretty centrally controlled. I know that there's a company called MicroStrategy that's converting their US dollar balance sheet to Bitcoin. Is this something that's happening more and more? Or do you think that there's still going to be kind of like these legacy dollar, settlements going on for a while longer?
Yeah, I'll break your question in two parts. One is about CBDCs, and then we'll talk about the traditional financial, like, large enterprise like Tesla coming in, buying it. So talking about the latter first, for every Tesla and Square that's coming out publicly and talking about their Bitcoin purchases, Ethan, there are 10 to 20 others who are doing it silently and not talking about it publicly. We are seeing, hospital chains, gaming companies, folks who have no business being in crypto, getting super excited about what is going on, because when you have like a $2 to $5 billion balance sheet that's earning 0.2% interest for you, as a CFO, you're constantly thinking about different ways in which you can actively, not be losing money by putting it in the bank. So same folks who used to be like, blockchain, not Bitcoin a year ago are now being like, okay, should I put 1% of my AUM in Bitcoin or 5%? And within that, how do I split it between Bitcoin and ETH? And the more tech savvy ones are going a step further, and they're like, okay, how do I start, leveraging DeFi to earn additional yield? How do I put assets into things like DAI or Frax? And can I earn, anywhere between like 5 to 10% interest rates on this? It's just very fascinating times, and the level of growth and interest that is coming to the space from these traditional institutions is just like fascinating.
Oh, it is. And I think there was a few times over the last couple of years that I was stumped just by an everyday person. I think I was in a swimming pool back when we could go to swimming pools and talking about Bitcoin, Ethereum. And one of the guys that was there was saying, it's a bubble. What's to stop some big institutional whale from buying up all the Bitcoin? And I said, well, this was like 2017. I said, well, it's kind of hard to get all of the Bitcoin. Nobody's going to want to get rid of their Bitcoin like that. But, flash forward to now, Bitcoin has traded so much more. And, with these big institutions getting involved, it kind of makes me wonder, did he have a point? Is it possible to kind of manipulate the cryptocurrency market like we've seen some hedge funds do or some other big groups? Or is it still pretty much a lot of people holding on to their Bitcoin?
Yeah, I'm happy to basically touch upon that, because that's a question that a lot of folks who are new into crypto still do ask today. Surely could be out of ignorance or could be just lack of understanding, but happy to shed some light on that. just if you look at the market cap of Bitcoin, it's over $1 trillion right now, right? So if anyone wants to buy more than 50% of Bitcoin, you have to spend a shit ton of money to do so, and you're going to take it's just almost impossible, theoretically speaking, for anyone to pull up that much amount of capital to just buy a 50% of Bitcoin. The largest purchases that you've seen are perhaps the tunes of what Tesla has done, right? Where you buy $1 billion worth in a go, or $1.5 billion worth. That's the tune of which you're able to do without moving the markets much. You can buy $500 billion worth of Bitcoin. Great. If you, I don't know who has it, maybe a sovereign wealth fund could possibly put all of that money into it, but that's not sound financial judgment. So it's almost impossible. These are all theoretical constructs that we could talk about. However, if you move down the chain, right, across long tail altcoin assets, that's feasible because those are still very young, immature markets. They're the equivalent of early stage startups. Could a VC fund come in and buy 50% of a company's equity if it's being publicly traded? Yeah, it's just your small cap public market equities. Someone could, but then the question is, why would anyone, unless they have a very strong thesis that this is going to grow? So there's no point in going to hypothetical constructs on Bitcoin being manipulated to that tune. At this point, the industry is so mature.
Yeah, that's really interesting. Thank you for getting into that. I wish I could go back in time with that answer. So, and earlier when you're talking about some of the other digital assets out there, are some of these larger institutions interested in smaller coins, or is it still primarily Bitcoin?
Yeah, good question. If I had to break larger institutions into again, two buckets, if you talk about hedge funds and you talk about enterprises, hedge funds, they all start with Bitcoin, Litecoin, ETH, BCH, the top 5 or 10 assets. But then very quickly, once they get their hands dirty, they start dabbling into some of the the top 50 coins, because it's all a construct of understanding. The more they understand the space, the more excited they get about the opportunities there are. Because you might start off with let me use Bitcoin as a digital store of value, but once you start understanding the value of smart contracts built on Ethereum, and then you realize, oh wait, there is more to this. The Ethereum has a couple of constraints and challenges. Okay, let me start looking at Polkadot. Let me start looking at Solana. Let me start looking at decentralized exchanges that are getting. But then you start looking at Uniswap, and then you start going into the rabbit hole of, okay, let me look at Rune and what's going on with this Thorchain ecosystem. So it's just a beautiful rabbit hole that I can see all of these folks going down, and there's almost a template of thinking that we're seeing happening here. But this is on the hedge funds and prop trading side of things. Fortunately, we are not yet at that place where Fortune 1000 enterprises have gone full degen and are trading long-tail assets, the crypto assets. They're still stuck to the top few. And I think it's good because they're not in the business of gambling their balance sheet away on 100x opportunities. Their job is to basically preserve the value of their balance sheet, and for that I think Bitcoin does a fantastic job of meeting the requirement.
Yeah, that makes sense. And I would imagine most companies that are getting into crypto, trading, some of these institutions, they probably start out small, kind of want to test the waters. How do you help them with that transition? Because I imagine the volatility of a lot of these tokens kind of make them a little nervous to convert all of their assets. So, for this past year, though, I think a lot of those people did very well because Bitcoin has gone up quite a bit, just speaking of Bitcoin. But I've also seen a rise in some of the alternative coins. It's almost like they kind of rise and fall to some degree with Bitcoin, at least over the last few months that I've been paying attention to it.
Yeah. Bitcoin is still, the leader of the pack, right? It does impact the rest of the industry, almost clearly. There is a correlation. Now, if Bitcoin remains flat, which it has, say, for example, over the last 60 days or so, that's where you start seeing money or profits start rotating from Bitcoin to Ethereum to the longer tail asset class. But, when Bitcoin starts moving up, we could start seeing the oxygen getting sucked away from the long tail assets back to Bitcoin. And when Bitcoin's going down, everything else goes down too. So there is still a large correlation, and Bitcoin's still leading the pack. And I believe that might continue to be the case, at least for the next 3 to 5 years, until we, solidify the understanding and the infrastructure across the longer tail asset class. I think we'll get there in the next 3 to 5 years for sure. But until then, Bitcoin will still be the leading indicator for the rest of this industry, I believe.
All right. Yeah. And earlier you mentioned breaking apart who your normal clients are. Would you say that other than hedge funds and like OTC desks, who are some of the other groups of people that might be interested in your services?
It's that persona graph has changed in the last 12 months quite a bit, Ethan. If you go back like over the last 12 months from April 2020 to now, we've seen about crypto native institutional volumes go from 92% or so that we had, if I believe, to less than 70% now. So most of the new growth has come from non-crypto native institutions. And if I had to break the personas of these non-crypto native institutions, as I mentioned, there's these large enterprises, right? The Fortune 1000 companies which are coming and trying to basically put crypto on the balance sheet. You have these large traditional hedge funds. But you have some interesting new personas too. You have these 401k and IRA providers who are coming in. You have, traditional enterprises who are trying to use crypto as a cross-border payment mechanism, which is a very interesting use case. They're trying to lower the cost and time of B2B payments because if they're trying to, send money over weekends from Hong Kong to, Canada, and they're like, oh man, like it's a holiday on Monday, but we need to get this payment through. This USDC is just a phenomenal rail, to basically bypass all of that. And it's cheaper and it's faster. So that's another use case. We're seeing a lot of international remittance companies too getting into the space for the same reason. Similarly, payment gateways as well.
Yeah, that's interesting to me because I have some close friends and family who came from Mexico originally. And there's other parts of South America where it's kind of, a lot of folks send their kids up when they're 15 or so, and it's kind of expected for them to work and then send money back home. I don't know how much of a percentage of the GDP for Mexico it is, but remittances, it's huge, like Western Union wiring money. But I kind of had this thought, what if they could work here and send back, cryptocurrency, and then, would it be cheaper? Even the cost of sending a Bitcoin transaction, it's still got to be less than a Western Union wire or a bank wire. And then it just made me think, well, what if they just got paid in crypto so that they didn't have to, transfer their dollars or pesos over to, because inevitably, whenever someone uses an exchange, there's a fee built in, even if it doesn't say. There's up front, there's got to be somewhere these businesses are making money, I would assume. Kind of just curious where all this is heading, because I think there's just so many use cases for people to use this technology, but it's just not quite. We're just not quite there yet, in terms of the everyday person, the lay person, being able to use it. So. Sorry, kind of went off on a tangent there. I was just thinking about it.
There's a lot of depth to that question, Ethan. So for any time, for any industry to get disrupted away, you need to see a paradigm shift in either the cost, right, on the cost level, or on the user experience level. Unfortunately, as long as we keep saying crypto repeatedly, I don't think people will get into this. You have to make crypto the underlying rail, which people don't need to. You can obscure that away because the cost is already 10x lower. And let me just use the same example that you spoke of. If you're trying to send money from anywhere to Mexico or Mexico to anywhere for via Western Union, today Western Union charges you 7%, right? If you're trying to do the same thing via, I think, BitPacer, which is the Mexican exchange, and you're trying to use, a transfer there, it'll cost you less than 50 basis points at the very most. And, if you're using something like Binance or something, it's 10 basis points, right? Where is 0.1 to 0.5 and where is 7%, right? Just like a paradigm shift, there's more than a 10x delta in the cost itself and the speed as well. You're 99% faster because you can literally kind of send that money even in the most inefficient time on the Ethereum chain. If you're sending USDC, it's like 30-minute transaction. Whereas, if you're trying to send money via Western Union, they're only operating certain hours to certain hours. You cannot take over weekends, blah, blah, blah. Bank holidays, national holidays, none of that things apply to crypto. So it's just a phenomenal paradigm shift from an accessibility technology perspective. What we need to do is just obscure the word crypto. You're just like, it's money transfer is just faster. And the minute we get there in terms of understanding the user experience, I think we'll start seeing a lot more adoption kick in there too.
Yeah, that's a really good point. I never thought of the word crypto, but it just kind of sounds like mysterious and hard to figure out. It's kind of so anything that's cryptographic. It just, maybe there's like a subconscious barrier because it's like, that might be too difficult to understand because it says crypto right there. So yeah, maybe we need a rebranding term there.
Yeah, it takes a while, right? I'm sure in the early days, 90s, if you just said you're sending money via internet, people are like, whoa, why? I don't know what this money via internet is. I don't want this magic money. I just want real cash. And it took us like 2 decades to get over that mental hump, right? And it's just been a different user persona too who's basically dabbling with that today. So until we have that paradigm shift in terms of understanding and comfort levels, I think we need to start using different, perhaps, user experience or user interfaces to make sure that option kicks in.
Absolutely. This is it's such a good time to be in this space, to be learning about it. I mentioned earlier having friends from my school era getting into it, and it was just really interesting to watch them talk about it on, I think it was on Facebook. 10 years ago, nobody was talking about this stuff. You had to go onto like message boards, and people thought it was for drug dealers and gun smugglers, but now it's out there, and you can see it on a lot of these TV programs. It's kind of being treated like a stock for some people. I think most folks don't really understand just how impressive the technology is and how it's going to revolutionize so many industries. I know we've been talking a lot about finance here, but it's fascinating to me. And you mentioned DeFi and people kind of instead of focusing on just Bitcoin, when it flattens out, they get into some other asset classes. The utility of some of those tokens, I think, they're going to benefit a lot from people buying on speculation, which is kind of cool. I know that you've been getting a lot of interest from some like venture capitalist firms. I assume like the public's learning when you get huge investments from different groups. Is it helping you to connect with more and more institutions, or have you guys just been kind of like organically growing, or how do you find your new institutions to help?
Yeah, just it creates legitimacy and validation in terms of who we are and what we've accomplished so far. Just getting the backing of some of these large brands such as Fidelity, American Express, Tiger, BCAP. In the last few months, ever since we've announced it, there definitely has been massive influx of inbound demand. In fact, to the point where I am unable to grow the team to catch up with the crazy demand that we're getting. So we're just hiring left, right, and center at this point across all functions. And it's just been a good time because the entire pie is growing for everyone, and we are getting a good chunk of that pie. So just a good time and a good place to be. And I think we feel fortunate that we've been able to time our fundraisers and our announcements to be able to take advantage of it.
Yeah, that's excellent. So it's good to learn about FalconX. There was one question I meant to ask you about crypto miners, because they've kind of been in the background this whole time, just doing the good work for us all. But they've got to be amassing these huge fortunes by now if they've been doing it a while. And the topic of liquidity is something that interests me quite a bit. I don't necessarily understand it as well as I should, but maybe just explain deep liquidity and how you're able to offer that to miners and other folks utilizing your services.
Absolutely. So FalconX acts as a principal dealer, and I think we were talking about differentiation earlier, but I didn't get into it. So as a principal dealer, we sit on top of several different exchanges. We sit on top of OTC desks. We sit on top of dark pools, market makers, and we aggregate liquidity across all these platforms, right? So we are a superset of exchanges, OTCs, and all the other liquidity venues in the world. So if you're trying to place $100 million buy or sell order or $1 billion buy or sell order, as opposed to going to any one liquidity venue or 3 or 4 that you would get plugged to yourselves, we have this network effects driven business where we are able to aggregate all of it and give you the advantage of splitting the order or basically taking liquidity from the 7 different places. So that's the simple nutshell of how we do what we do. Now, what is the advantage to miners? Miners, actually, if you talk about what's going on with them over the course of the last few months, they've just been making a killing, as you pointed out, Ethan. Right? Ever since like Jan, I believe, they've been extremely profitable because of this price run in Bitcoin, because the hash rate of BTC has not caught up with the price increase. So they're just minting money, and they're all reinvesting their profits back towards, expanding their infrastructure. So they're in a good place. However, miners come like clockwork at the end of every month because they need to liquidate some of the assets to pay for their electricity bills, steam expenses, and all of that. And they do have, that really large lots that they come to sell with. So there's 2 ways we actually facilitate sales for miners, either directly via some of these liquidity venues, or basically take it off platform and basically match it with some large institution that's coming to buy. Because if someone's trying to sell 100 million and we're at the same time get somebody who's trying to buy 100 million, it may not even hit any of the liquidity venues. It can just be matched off and in a dark pool manner. So that's another way to facilitate transactions.
That's amazing. I was just thinking, if I had been mining this whole time, I would have upgraded to solar because I live in California. Man, it's just so fascinating to see where all this is heading. And, I hope the momentum keeps growing, because I remember back in, I think it was 2017, Bitcoin went up to like almost 20,000. And then it seemed like everybody just cashed out, and then the bottom fell out. But I don't get that feeling this time. I don't know why. Maybe it just seems like a bigger movement, because even when the price will dip a little bit, it always seems to go back up pretty shortly after. So, I mean, I know we've been speaking a lot about Bitcoin. That's just kind of popular right now, but
yeah, it is the gateway for the industry. So we can not talk about crypto and not talk about Bitcoin, right? But I believe we're still in the very early innings of this rally. As much as prices appreciated for BTC, just the amount of institutional interest that we're seeing actively on a daily basis is just mind-boggling. And the retail wave has not even kicked in yet, right? We haven't even seen the retail FOMO of 2017 even begun. And Coinbase just went public yesterday, right? And we're starting to see a lot more interest. Just Coinbase going IPO yesterday has just created a lot more, has opened a lot more doors for a lot more people to just say, hey, now, the SEC has legitimized crypto, and you're saying the regular masses can access it in a different way. So a lot more people I expect a lot more people to start entering the space now over the course of the next few months.
Yeah, that's interesting. I saw that about Coinbase, and it's kind of a mind-boggling thing because they went public on the stock market. So somebody could buy stock in a crypto exchange. Am I saying that right?
That is correct. You are basically, if you believe that Bitcoin is here to stay, and if you don't want to get direct exposure to Bitcoin, but you want to basically buy equity in the platform that allows you to buy and sell Bitcoin, feel free to do so. And that is a stamp of approval from the government authority saying, hey, this industry is here to stay, and we believe that Coinbase is doing all the right things, and just it's a defining moment for the entire industry.
Yeah, wow. What a time to be alive. That's amazing.
Yeah. And it's just the largest direct listing ever on NASDAQ. So we're really happy to see how well it landed yesterday. And they're both an investor and a partner of ours, so super proud of what they've accomplished here.
Yeah. It's cool. It's definitely not like other industries where there's kind of like a scarcity mentality. It just seems like this is such a huge opportunity for everyone involved. It's very promising, I think.
Absolutely.
Probably not so much for some of the older legacy financial institutions. I remember they would print articles over the years just kind of bashing cryptocurrencies and Bitcoin, but then secretly in the background they were developing their own blockchain systems. So a little bit hypocritical on their part, but can't really blame them. I mean, people with power want to hold on to it. So
exactly. But I still think we're very early in this game, that it's not all lost for them. It's not a question of if, it's a question of when they start, pouring resources into it. You've seen the likes of JPM and Goldman Sachs publicly announce that they're creating dedicated teams and just coming in. And Fidelity has been in this space for the last 5 or 6 years, from custody to trading and a lot of different services. So the long tail folks, they're actually definitely going to keep coming into the space. You might think it's too late, but it really is not. Like, I'm sure, I think Brian Armstrong from Coinbase was saying yesterday in a podcast somewhere that when he started the company, he thought he was too late into the industry. This was 2012, right? The entire market cap of the industry was like $1 billion then. And Bitcoin was 95% of the entire market cap. So like we've grown from $1 billion market cap to $2 trillion now. And I still feel we're very early in the space, Ethan.
Yeah, I think you're right, and that's good. A lot of hope out there for a lot of institutions, a lot of individuals, even. Well, I've really enjoyed your time with me today. I think I kept you a little bit longer than we agreed upon, so thank you for that. I just wanted to give you the opportunity here to leave us with anything you'd like, and definitely tell folks where they can go to learn more and potentially get involved.
Absolutely, I think we covered a good amount today. But to all our listeners, if you could walk away with one message from this conversation, it's that, big money is paying serious attention to the space now. We are in the very, very early innings of this industry's growth. And we at FalconX are super excited to be building the connecting tissue of what this industry is, turning out to be. Think of us as the AWS liquidity rails for the entire digital asset ecosystem. So if you want to learn more about FalconX, please go to falconx.io. We are hiring. So if you're looking to get into this industry, please drop me a note or just apply. We're super excited to talk to you.
Yeah, very good. Well, thank you very, very much for your time. I've really enjoyed speaking with you, and thank you for sharing the knowledge with our audience. I wish you all the best.
Thank you, Ethan. It was a pleasure.